If you're a day trader struggling to make money, being consistently unprofitable, I think I just found a solution. This is gappers. This video is going to be about how gappers can make you rich. This might be the solution to your problems, bro. I'm telling you now, this might be the goddamn solution. So watch till the end. I'm going to give you everything you need to know about gappers. Because this video might actually be life-changing. So buckle up. Let's fucking get into it. So if you want to make money like this is money that I've made through gappers. $11,000 in one day. In one day. This is the amount of people make in like a month, in a week. This is in one day. Like, you can make a lot of money with this, right? So why you're failing right now. So this is some assumptions I'm gonna make, because this is what I used to do before I started actually making money. So you might have stock alerts set up, like scanners or any of that, or you might be in like stock groups, like Discord channels and stuff. Some of them work, I can't even lie, but 99% of them don't. And you might get this thing where it's like, okay, bullish reversal candle, head and shoulders, call pattern, take profit. It's stupid. It doesn't make you any money. There's too much randomness, right? You might see a stock that you think is going up, so you're like, okay, I think it'll go up, so let me just go ahead and buy it, and then it goes down. There's just too much randomness. What you need to have is a consistent strategy that works. Maybe not every day, maybe not even every week, but it works occasionally, so you can start making money consistently. Boom, 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 boom. Because right now it's too much randomness. It's like going to the gym. If any of you guys go to the gym, you don't just rock up at the gym and just like, yeah, let me just lift this today, let me go bench, let me do tricep this. Like, you go in there with a plan. Okay, first exercise is this, second exercise is this, third exercise. It's the same thing with trading. It's structured. I do the same setup, same thing every single day, bro. Every single day I'm doing the same thing. It's never random. Okay, today maybe this will go up. It's always just same. And this is what gets you results. So just quick heads up, I have my free trading bundle. It includes a fucking free course, ebooks, a checklist, and template. It includes so fucking much, and it's completely free. Click the first link in the description right now. Go check it out. It's fucking amazing. So this is there are a couple examples of gappers and what I mean by gappers. If any of you don't know what gappers are, it's basically when the stock goes up in price overnight. So essentially there might be news or something happens, and overnight trading, so post-market trading or even pre-market trading, stock goes up. So when it opens in the 9:30 bell, it opens higher than it closed yesterday. That's all it is. Don't overcomplicate it. So this is an example of it going up. So you can see the stock started gapping up and then kind of went sideways, and then when the market opened, it just went up. It went from like $12 almost to almost like 23. So it almost doubled this is like a 5-minute chart. So it doubled in maybe like an hour. Like this is how crazy it is. This is another example. This one is fucking crazy. So you can see how it went from almost $5 all the way up to like $19. And again, this is a gapper. So this is one that went up, went sideways, opened, went from $5 all the way to $19 in a single day. That is 4xing your money. If you put $1,000, that would have turned into $5,000. Nutty. But these are just some examples. So what do you look for? What is there to look for, right? Okay, so you told me I need the gappers. What do I look for? Here's a couple of things you can look out for. The first thing is a news catalyst. What a news catalyst is, it's when a company releases news. So let's assume Apple, they just acquired Microsoft, right? Apple puts out news, we have just acquired Microsoft. The stock price of Apple is going to go to the fucking moon. That's a news catalyst. If a stock is gapping up but it has no news, it's probably not going to do the best, because no news means that it's just random hype, it's just randomness, and it'll just fall when the market opens. If there is a news catalyst, that means that people are clearly interested, there's potential, there's a reason for it going up, and it will probably continue going up once market opens. That's the first thing. Second thing is high relative volume. Again, this is pretty much, it just means that there's more people trading the stock than there usually are. So let's say on average, the stock might get, let's say, $100,000 of volume every single day. But today, because it's gapping up, it has $10 million of volume gapping. That's what you need. What you don't need is, it is gapping up, but it has relatively the same volume. That doesn't signal any confidence. The third thing is, you need it to gap more than 5%, right? You could technically trade gappers that gap up 1%, 2%, but what you really need is stuff that's gapping up at least by bare minimum 5%. That's what creates a change. That's what people are going to be looking at. If it's less than 5%, no one's going to be staring at it. No one's going to trade it. No one cares. And the last thing you need is low float. So like less than $20 million, 20 million shares, I mean. So low float, the reason is very important It's just basic supply and demand, right? If the supply of the stock is only 20 million shares and there's people out here who are trading like 100 million, I mean, the demand is 5 times more than supply, meaning stocks can go up. That's just basic stuff. On top of that, if you have short sellers who are shorting the stock, it's going to go to the moon because now there's less stocks to buy. So just low floats, very bullish most days. Now, what to avoid? Because it's good knowing what to do, but it's also better knowing what to avoid. So here you can see a picture of a stock that gapped up, right? It had a catalyst, blah, blah, blah. But market open, it just tanked. Immediately just poof. So what do you need to avoid? The first thing you need to avoid is low volume, right? If a stock's gapping up, but there's barely any volume, nobody's trading it, completely avoid those. It's just, you can tell by looking at the stock chart, there's something wrong. This has a lot of volume. You can see it's a bunch of different volume. But you can see some stocks sometimes where it's just, like this little bit of volume here. You never want to trade stocks like this. Second thing is overly extended. This is pretty much the reason why this stock failed. It was just overly extended. You can see that it just kept going up and up and up and up and it kind of went down, but you can see how it's a huge run up. If it's already ran up this much, what are the chances that it's gonna continue running up? It's gonna lose momentum. So you need stocks that aren't overly extended in the market open. This one failed. And then another thing you need is large sellers, large resistance. You need to make sure that you don't have these, because if there's a huge seller at this position or a huge seller in the market open, instantly it's going to tank. So those are the 3 major things that you need to avoid. But I'm telling you, bro, if you focus on gappers and you look at all of these things that I just told you, this might be the secret. This might be the thing that you've been waiting for to finally start making money in this market. Because I know some people, like I used to be like you, bro. I used to be struggling with this stuff. It was horrible, and I would just do random things. Okay, this stock's going on, let me quickly buy it. I would lose money. It was horrible. Stick to a solid plan, just straight gappers, because that's the change I made, and it's made me a lot of money. You saw the screenshot in the beginning, and this is just a statistic. So from all of my trades, I've done 577 trades. From all of my trades, you can see that over 5% gap was 100% of my trades. I have never traded a stock that is under 5% or negative 5 to 5%. I've never traded a stock. So even before, when I was losing money, I was still trading over 5%. This just goes to show you, this is a crazy statistic. This just goes to show you how profitable it can be to trade stocks that are gapping. Think about this. I have never traded a stock that's gapped down or hasn't gapped at all. Just something to think about. Now, if you want to see all of these statistics, because again, I've done 577 trades. If you want to see all of the statistics, including this one and a bunch of other crazy stats that you can also analyze and apply for yourself, click the video that just popped up over here. It just goes through every single statistic that I've seen from the 577 trades that I've taken. Just a quick reminder, get the free trading bundle, first link in the description, click it, check it out, it's pretty cool. And if you want me to help you one-on-one, because a bunch of you guys have been asking me for mentorships and all this stuff, second link in the description, you can go check that out. And that's about it. Subscribe, like, all that good stuff, and I'll see you guys next video. Goodbye.